Hey yo, what's ablaze with the group who never misses an episode, the Chico Army. And if you're new and looking to join that crew, take the first step and drop the title of Viewer of the Tube. My name's Tyler, and the content that comes out this mouth always packs a different punch.
3, 5, get the
You know our crypto smoke rings. It's time for Chico Crypto. Well, it's been bullish to say the least the past couple of days. Enterprises buying BTC reserves, CBDCs at the forefront, and PayPal to Venmo going crypto. And the price has reacted in just past 2 days from around 12.1K to testing 13K twice. Why so important? 13K. Why is the price having a tough time breaking it? Well, if you just joined the markets in the past year, you didn't experience July 2019 when we got right to that level, but got rejected and rejected hard. So that is why 13K resistance is going to be a rougher one than most. A break of it, highly uncharted territory, of which BTC has only been above once from December 5th, 2017 to January 14th, 2018. A total of just 41 days back then, and the majority of the time was fighting to stay above it, not bullish. So I love comparisons with Bitcoin, going back into historical bubbles. So let's go back to the 2013-14 and that hype cycle. $800, that resistance level. It was basically broke on November 25th, and we stayed above it until December 5th, 11 days. And then we got back above on December 8th for 6 more days, fell below it, and finally got back above January 2nd, and stayed above till February 5th, 2014, 35 more days. Total days above 800, 52 days. Now let's expand out the 2013-14 chart to when it retouched that resistance in July of 2016. Kind of like how we touched 13K resistance in July of 2019. Well, back then the price also came right back down and didn't get close to the resistance once again until the end of October 2016. Kind of like today, we are back to the resistance, October of 2020. Now, some of you may be saying, well, that's not exactly the same. There's a 1-year difference from those cycles that you didn't include into today. Well, that fits in line perfectly with my expanding cycle theory, which states about a year is added in between hype cycles from bottom to top. So back then, October 2016, I compare where we are today. Well, what happened after back then? Well, we stayed below the resistance for November and didn't officially crack it until December 2016. And during that month, we retested the old all-time high, December, of around 1.2K. Now, I don't want to get ahead of myself too far and go that far into the future, but the more things change, the more they stay the same. November has a critical, contentious, highly publicized election. The markets, they're chomping at the bit for a stimulus, and it seems to me they don't care or want to get a deal passed. Thus, I think it's going to be BTC bouncing in between 12K to 13K, maybe 13.5K throughout this month. And as the news comes and goes, stimulus is coming, pump. Stimulus isn't coming, dump. But no matter the news, I don't see it dropping below 12K. So, the election outcome, it will have an effect on the markets. I'm no fortune teller within the markets, but there are Democrats and Republicans within them. If their side loses and they think it's bad for their investments, they might dump, even though they should realize it will be business as usual no matter who wins. So the election outcome could have a rocky hit on the markets, Finance 1.0 and crypto, but after it's realized by everybody we're doing the same dance over, BTC will finally officially break into that 13K to 14K level, and I predict this to happen sometime in December. So the next big question is, in between this time, the rest of October through November and into early December, will there be another alt season? Will altcoins find their footing and go boom? Well, it does seem to me some alts are finding their ground and rebounding. Going to CoinGecko and sorting by the top performing coins over the past 7 days, only 8 alts have performed better than BTC. But sorting over the past 24 hours, altcoins are dominating BTC, a very long list outperforming 67 altcoins to be exact. Now, unfortunately, I do not see a major alt season until Bitcoin Bitcoin really breaks 13K and 14K and sits above that unknown territory for some time. But this means this month is a month of accumulation for me, of altcoins who are primed to rally come December or early next year. Now this news, dropped 3 days ago, makes me bullish AF on what just happened. Unibright dropped the news in a blog titled, Provide incorporates the Unibright framework to create unified service for corporate data sharing. And the TDLR says, after a productive year of work on the baseline protocol project and growing customer demand, Provide and Unibright are consolidating their enterprise technology stacks under a single entity. The unified offering will create a low-code, end-to-end baseline integration suite, enabling a new age of business-to-business process automation using blockchain as the backbone. Now this is freaking huge, you guys, as they show this baseline stack below, and it's a mashup of Provide and UBT, including enterprise DeFi services. Now this is big because Provide is UBT now, and UBT is Provide. We know about UBT, I've covered them many times, so who is Provide, and why will this be big for UBT? While going to Provide's website, we can see they synchronize everything with enterprise low-code distributed systems for blockchain business integration. And scrolling down, this is from their technology, including the framework, which is already Unibright rainbow colored. So Provide is a major enterprise key for Unibright, not only because of Baseline, their Coca-Cola project, and other tests we haven't heard of from the base, but because of another base, Coinbase. Earlier this month, UBT was confirmed for Coinbase custody. From the blog, UBT confirmed for Coinbase custody, deepening partnership with Provide to enable the Universal Business Token. So, Provide and Coinbase, this stuff could actually be really freaking big for Unibright. Going back to their Provide partnership blog post, the stack shows Unibright free equity under Enterprise DeFi. Now, if you didn't know, UBT with free equity is creating a model for enterprise tokenization, STOs, and from this February blog post about it, they already had a sample UI built. Down below in the Unibright free equity and the Unibright token section, it says, being an early player in the field, we will expand to custodian services. We are building partnerships with leading players in the field. Coinbase, offering software solutions for distributed key management, as well as hardware solutions and data center design. So, could this be a direct bridge for these free equity tokens for strong custody under Coinbase? A bigger partnership than we realize? Now it's time for a short sponsored segment of this video, being supported by the team at Hathor. And like always, the full details of our agreement can be found in the description. So first, what exactly is Hathor? Well, Hathor is a first-of-its-kind transactional consensus platform, which combines tech of blockchain and DAG structures to push the limits of scalability. Hathor's source code, which has been developed from scratch, is a result of 7 years of academic research, including the PhD thesis for Hathor from founder Marcello Bragliato. Now, of course, you know the DAG structure was made popular by IOTA, and it made great strides for scalability. But when the number of transactions is small, the solution doesn't seem to work, which, as we know for projects and tokens starting out, limited number of transactions will be a feature, not a bug. So how did Hathor solve this? Well, they use the DAG structure for scalability, but within the DAG structure are blockchains, which are powered by proof of work and mining. These blocks contain, collect, and confirm all the transactions throughout the DAG, as well as any newly generated tokens. This ensures security whenever the number of transactions is small, unlike IOTA. So, for the mining of blocks, is Hathor going to be putting out their own consensus and looking to compete for GPU or ASIC hash power? Well, no, they're taking the route of merged mining with the classic proof-of-work algorithm, the same as Bitcoin, meaning security is about as good as it can get. This means Bitcoin miners can secure the Hathor network at the same time, receive BTC rewards and HTR mining rewards. And the mining merge has been growing lately. The Hathor pool has been growing in power. Just last week, it controlled 33% of the Bitcoin Cash hash rate, as you can merge mine Hathor with Bitcoin Cash and BSV2. Now, the beauty of the scalable design is the ease they have built into. For example, token creation. Right within the HTR wallet, you can create your own custom tokens instantly with zero coding. The only requirement is a deposit of 1% in HTR. For example, creating 1,000 tokens, you would need 10 HTR. And if the tokens are melted, they are returned. So if you would like to play around, I've included the links to the mainnet wallets below. So token creation, it's 100% ready and live, but here soon, Hathor is going to have even more, like nano contracts, which is their easier and safer implementation of embedded smart contracts, which they are 62% complete with a planned go live in Q1 of 2021. But also side chains, which will create a private DAG chains and more, 17%, so down the road. But the team is completely transparent about their progress, and that is always a beautiful thing in crypto. Now back to another altcoin I'm definitely accumulating during this accumulation phase, and that is iExec RLC, another coin who has been under the radar preparing for big things. Just yesterday, they announced a token swap offering. Let's listen in.
So we've been talking to companies of all sizes over the past 2 years, and one key obstacle to enterprise adoption of blockchain protocols is the lack of compliance. Regulation regarding anti-money laundering is strengthening, and so blockchain protocols that don't play by the regulators' rule won't be able to address the enterprise market. And this is exactly what the AMF approval is about.
And this AMF approval, who has it in France?
Well, very few. None of them actually received the approval for a swap offering. That's a world's premiere we are really proud of. This was a challenge when we first approached the AMF, which is the French equivalent of the SEC in the US. We didn't want to raise funds in exchange for a new token. Instead, we wanted to bring compliance into our already existing protocol. And this is why we came up with the idea of a token swap offering.
And this new regulated marketplace, how does it work?
Well, it's very simple. So users get the choice to complete KYC steps. Once completed, they will be able to exchange their RLC against the exact same amount of enterprise RLC, or eRLC. This simple mechanism ensures that all the eRLC transactions are fully compliant. And what's more, also that enterprise adoption directly contributes the original token economics.
Yeah, they are setting themselves up to be used by enterprises, as enterprises couldn't legally use their current marketplace, and they didn't want to drop their 2017 original token in tokenomics, so they created the enterprise token swap. When will this go live? Well, let's hear.
So the offering is starting early next year, and stay tuned to discover who will be the first enterprise users of the regulated version of the marketplace.
Early next year. That was the only way the big dogs could play with iExec, and I for one can't wait to hear who it is. Cheers, I'll see you next time.